Alrighty, traders, good afternoon, good morning, good evening, and welcome to Taco Tuesday. And hopefully everyone is doing well. I haven't been broadcasting for a while, been working on the back end and working on a couple of things that we currently at the moment are setting up for new opportunities. So a lot of things being done. But traders, this year we're going to be talking about ETH, gold, as well as take a look at the euro, US dollar, break it down. But also we're going to include as well is NQ as we go ahead and look for trading opportunities, look for scalp trading opportunities. Maybe we find one today. Stick around, traders. We're going to go ahead and dive into all of that right after this. All right, traders. Well, thank you for joining, and I appreciate everyone being here. I want to go ahead and make sure that everyone understands that Traders Network Club has changed their memberships up a little bit. For those that don't know, we have the Navigator Pro, the Wealth Flow, and the Optimal Traders. If you purchase everything, it's about $1,200 per month, but don't worry about that, traders. We've got a special going for the 4th of July. I want to go ahead and let everyone know. I will share that link with everyone where they can get all of this for $69 for the month of July. I want you guys to get your feet wet. I want you guys to go ahead and engage and get involved in what we're doing here. And I want to give you guys the opportunity to be able to do that at $69 flat rate for the month of July. So I'll go ahead and share that link with you guys in just a minute. But before we go ahead and get started, traders, I want to go ahead and also let you guys know that our standard rate, we actually got a special running as well. And this is not just for the month of July, but we have our the Ultimate Traders Bundle. And you can get all of this for $297. In fact, if I go ahead and open up this right here and pop this open here, you'll see that for $297 a month, you can get everything. Navigator Pro, Wealth Flow, and Optimal Traders. If you don't know what that is, traders, the Navigator Pro is giving you the tool that I use to trade the markets. The Wealth Flow is giving you 3 trading systems, Trifactor, Hedge Finder, as well as the Market Chaser, all included in the same price at $297. And then Optimal Traders is futures trading, where we look for trade opportunities, trade the markets, and that, of course, is at $297 for everything. And if you do a yearly payment, you can get it for $197 per month. All right, traders. Now, with that being said, let's go ahead and jump into the market. I'm currently at the moment right now, I'm just about to get limited out here in profit. I'm actually going to take my profit here early. There it is there. I'm going to go ahead and take some profit off the table here. And the reason why, traders, is that I was looking for that last final push here. Let's see if I can get it. In fact, I'm going to close out. All right. Now, I just closed out my second trade at the moment right now. Second trade. I'm going to go ahead and show you. This one took a little bit longer than I would like to have seen, but I'm going to go ahead and put the information in here. And it is the last trade that's been generated right here. If I go to my trading account right here, and I'll go ahead and press go on that for today's trading. Let's go see here. Today's trading. Let me see if I can go ahead and put this up again. Today's trading, there we go. All right, there we go. So we made, on this trade right here, we closed out with $335, but the net P&L is $321.60. $321.60, I'm going to go ahead and put that in, $321.60, $321.60 right here. And that was out of 2 trades this morning. So 2 trades, there it is, 2 trades. My goal is only $120 a day. Now, let me give you guys a little bit of input on this. Traders, listen out. What we're trying to do here in July is that we're taking a funded account. Here it is right here. This is the funded account. And what we want to do is we want to pass the funded account within 30 days. Now, we did a run last month for 7 days, and I'm going to go ahead and show you right here. Last month, we did a run. This is the profit that we generated last month in 7 days. So we generated $2,815 in 7 days, doing exactly what I'm doing currently right now in the live trade sessions. So traders, if you want to join us, make sure you go ahead and sign up for that $67 a month. And you can join me in the live sessions where I go ahead and look for scalp trades and just try to hit our 120 per day. Now, this is a funded account. I want to just let everyone know. I want to be completely clear, open, transparent here, open and transparent. But I want to go ahead and let you guys know it is a SIM account of $50,000. Now, let me give you the breakdown of exactly what that means. $50,000 means that you got certain limitations. You can only trade with a maximum drawdown of $2,000. $1,000 per day, but a $2,000 maximum. Now you'll notice right here it is also end of day. It's an end of day funded account, which means that every day it takes the new high balance and then it sets the trailing balance or trading max stop loss based on that. So if I make $1,000 that day, then my next trading stop is going to be $1,000 more. So which means if let me go ahead and do the drawings here to make it a little bit more clearer right here. Just give me 1 second here, and I'm going to show you exactly what this means. So making sure everyone understands exactly what this means. All right, so here we go. If we start off with a $50,000 trading account, right? You got $50,000 right here. And if you make $1,000, which means you got 51,000, all right? That means the next day, instead of $48,000 being your max area where the market can stop you out, which means $2,000 less than the 50,000, it now goes to 49,000. All right. And if I make the next day, I make, let's say, $500, then it's 51,500, right? That's the balance. Then the max limit is going to be 49,500. I cannot hit that area. All right. And you can see right here, currently right now on this account, if I go to my Top Step account right here, you can see here that the yesterday's close was at it says there that this is my profit being reached, but you can see here it says that you cannot allow the account to go to a balance below 49,500, and the reason why, that's $2,000 above the high. So keep that in mind, traders. That's what it is, and that's what we're going ahead and target. So what I've done is I've used the account size of $2,000. So although it's a $50,000 trading account, we're looking at a $2,000 account, and with $2,000, we're managing our risk. So every time, and when we go into the month of June, and we made $600 in one trading day, that worked out to 551% based on the fact that it's a $2,000 drawdown that we're working with, because we only have $2,000. We only have $2,000. So our profit potential on that was 551%, and that is above our $120 that we're looking for. So traders, that's all we're looking for right now, is we're looking for 120. So traders, today I'm actually done with trading. I've done 2 trades, and as you can see here in my TradeOvate account, you see 2 live trades being placed. All right, and I've made a net profit of $321.60, and that is exactly what is being put into my tracker. If you go to, let's say, yesterday we made $685. And we placed 7 trades. Let's go take a look at my tracker right here, just to go and confirm this is the real deal. So yesterday was the 30th. There it is there, 30th. Go there. There's the trades. So actually, in fact, it says 10 trades here, traders. But if you look at the breakdown, you can see that these trades were actually one trade. It's just they closed it out separately. So there was actually 7 trades. And out of the 7 trades, we did close out with a net P&L of $685.60 right here. And that is what is being put into the tracker right there. Okay. So everything I've got in the tracker right here, I'll share this tracker with you so you can you can watch it, follow it as we go along the way. But every day we're going to go ahead and look for that $120. Now, traders, this is what we're going to look at. So as an example right here, we had a couple of trades that were setting up this morning. First, number one, we traded the silver bullet setup. Now, if you don't know what that is, basically it's the high and low of the 9 o'clock candle. And we look for this right here. We actually look for the market to manipulate and go up towards the 9 o'clock candle. This is where we made our first trade and took our profit. Now, I'm going to say this, that I was not, we made, on our first trade, we made $137. I believe it was that much on our first trade. And I wasn't planning to trade again. But after this candle manipulated right here, all right, manipulated, it created another opportunity. And I really missed out on a great opportunity here because the market dropped all the way down to the low right here. It dropped 913 ticks. Now, what does that mean in dollar value? All right, let me show you right here. In dollar value, that means 903 times that by 50 cents. All right, that's $450 per contract. Now, we trade with 5 contracts, up to 5 contracts. So you're going to take 450 times it by 5. That's $2,257. Now, let me tell you right now, on a real account, which means account that is live, not the evaluation account, but a funded account that is live, that's great. 2,257 is fantastic. But this is what happens to the funded account. If you surpass a daily 50% of the daily target, so as with your evaluation account, if your evaluation account is set to $3,000 to pass your evaluation, you cannot make more than 50% of that value. If you do, they will start moving up your actual target. So it won't be 3,000 anymore. It'll be 4,000 perhaps. All right. Because it's going to be 50%. So if I make $2,000, then they're going to make my target $4,000. So it's very important, traders, and take my word for it, because here it is. It's plain and simple here. You can see here. Take a look over here. This is it's actually one of the rules. One of the rules is that we reach $3,000 in profits, all right, to pass evaluation. And then the other rule right here is that you cannot be greater than 50% of your total profits, all right? They want to see consistency. They don't want to see you making $5,000 in one day and another day 2,100, 300. They want to see consistency. And so they've put in this sort of like rule that you can't make more than 50% of your daily profits, or at least your profits, or else they're going to increase your target. So we're going to keep it below that. So I make sure that if we making any trades, that we're not going to take more than or chase more than 50% of the targets. Now, trader, here's another trade setting up, developing right here as we speak. Now, I am out. I've made my profit for the day. But here we've got around about 1 o'clock, between 12:50 and 1:20, we may get some additional setups. Now, this is that 5-minute time frame right here. Now, all I really want to do when looking for these type of trade setups is, traders, is go ahead and look for the market to create a pattern. Now, in this case, now, if we look at the pattern that we've got here, this is what we've got. We've got the market creating this order block sitting over here. Price is testing this order block. If we trade back below this order block, guess where we're going? We're going back to the lows down here at this area. If the market holds up here, we could go back up into this fair value gap sitting over here. So this is the ideal place to start looking for a trade opportunity. And if it does set up, traders, we can go ahead and trade that. Now, if we get that reversal, then this means that this becomes the order block that we'll look for price to trade below and then retest it and then sell off again. And traders, all I'm chasing after is 50 to 60 ticks in the market. That's it. To get my 60 or my $120 in the market, all I got to chase after is 60 to 70. Now, let me go ahead. I'm not going to trade this on my live, on my funded account today. Let me go ahead and do this. I'm going to trade it on a demo. I'm going to show you exactly what this looks like. Okay. What this looks like from a trading perspective. So let's go back here. Let me go back here. and show you what this is going to look like right here. All right, so if I was looking for a quick move, here I have the market retesting this area. I'll go down to the 1 minute time frame right here. Now, traders, notice that it's holding up here, but we've got a small sort of order block sitting over here. Right there it is. That becomes a breaker block. Price is testing that. Now, what I'll do here is I would go ahead and want to sell based on that. Now, again, just a quick test. I'm not trading this live. I want to go ahead and show you what it is. So I'll go ahead and sell, chase after just 50 ticks on that market, sell it right here at resistance. And this is where our target is. Now you can see it's 112, so I'm going to move it a little bit further down. I'm looking for 120. I'm going to move it down right about there. All right. Now what you're looking for, what I'm looking for is I'm making sure that the market stays below this right here. All right. It can come back and retest it, but I want to make sure that this breaker block that we're seeing here, this bearish breaker block holds. And if that breaker block holds, then price is going to target the next low. Where's the next low? Right here, we have got this target sitting over here. Now, you can also see here, traders, that we have a high, low, and then new high. So the market's also going to try to target this area down here. So this could be a target right here. All right. Now, I could go ahead and make a decision, right, and decide to scalp this move right here. But if the market trades above there, look to execute or at least get out of the trade, because it's clearly going to go back up to the high here. And so what we look for is these sort of patterns where we can go ahead and scalp the markets, look for those quick profits, get in and out of the trade, but chase after that $120 on a trade. And traders, if I get my $120, I'm simply going to go ahead and exit the trade and get the heck out of Dodge and look for the next setup. Or if I make my profits, simply go ahead and stand aside and not trade for the rest of the day. All right. Overtrading can be a problem that a lot of traders struggle with. And so we want to make sure that you don't get to a place of overtrading, but allow the market to go ahead and create these patterns, create these opportunities, and then trade them. All right. Now, I'm going to go ahead and talk about a couple of things here as well. All right. And the one thing that we're going to talk about is different types of ways to trade the market. Now, traders, there's two ways to trade the market. You can trade with cost averaging, and you can trade with one entry with stop losses. All right. That depends on you. All right. So as an example here, if I had to go ahead and use NQ here, and I would go ahead and put a stop loss, my stop loss would be up at this area right here. Protect that position. All right. So I can go ahead and do this, take a stop loss, protect the position up here. Now, what I want to do is I want to give it room to trade without getting stopped with a spike, because the market could spike. So what I tend to do is look for a fair value gap and then put my stop above the fair value gap. This is actually what a safety stop would look like right here. All right. So worst case scenario, I get stopped out. Now, if you're scalping, right, then you've probably got a 95% chance of being right. And there's a 5% chance of being wrong. So if I place 10 trades, into the market, well, let's say just 5. If I place 5 trades in the market, and out of the 5 trades, I win 4 and I lose 1. What is that going to mean for me? If I'm chasing after $120 on the 4 trades, then I'm making $480 on that trade. Now, if I take one trade and I lose one trade, and let's say I max my risk to, let's say, $240 as a risk, then that means that traders that out of the 4 trades, I'm making $480. Then if I lose one, I'm losing $240. That still puts me into a net positive of $240. It is a mathematical calculation, all right? You got to look at your strategy and say, how often am I successful in my trading? And based on your success, you can use that to be able to quantify what sort of risk you can put onto that trade, and know that if the market doesn't work in your favor, you do have a stop that's going to protect that position. So protect that position, but don't put it too tight, because the market's going to do these wash and rinses. We call it liquidity grabs, where you get these spikes through these levels, but make sure your stop's in a place where you're not going to get stopped out just because of a little spike. Now, if we're wrong, and price is going to go to the high. Let's get the heck out of Dodge, right? All right. Now, another thing, traders, let's go to gold. We just saw a trade. We just saw a trade today on gold. We actually went and implemented right here. We placed a trade on gold, and we placed it based on. It actually was the 4-hour time frame. You can see here my stops above the 4-hour right here, and I'm looking for gold to actually continue to move back down south. So we're selling gold, and we're looking for gold to break through this fair value gap. If we don't break below this fair value gap, we might be interested in putting our stop at break even here, because the market's going to probably go ahead and move back up and trade higher and then use this as an order block. But for right now, I'm going to use my stop above this area right here. And the reason why we did that is because we did see, oh, and it looks like, let's see here. Did we get stopped out on NQ? Let's see here. 1 minute. Yeah, it looks like we got popped here on NQ right here. All right, so we got popped on NQ. We'll look for the next opportunity coming up soon. All right, let's wait for that. We'll look for the next opportunity. So on this pair right here on gold, we went ahead and we shorted the market based on, actually, I think it was a 15-minute entry. Yep, there it is. So we entered based on a 15-minute entry, and it was based on this. The market created this high, low, and then the market took out the lows right here. So we entered on the pullback as the market came back into this order block sitting over here, or this breaker block, and we shorted the market based on that. And we put our stop tight right here. Now, if you look over here, our risk was $700. We're up $952. So we're definitely up more than what we're risking. Now we're looking for this market to take out this fair value gap in the 4-hour. If price takes out the 4-hour fair value gap, we can move our stop to break even, protect that position. Now, if we feel uncomfortable and we don't believe the market's going to move to that downside, then we've got two choices. And those two choices is, number one, take up profit off the table, or go ahead and move our stop to break even. Those are going to be our two choices. Now, I'm going to choose to rather let this one ride, and let's see if we can break below this fair value gap, because already we can see we did have a nice bearish candle right here. We want to see the market sweep the low right here and take it out and trade lower. If we don't, we're going to possibly bounce off this fair value gap. All right. So gold, we're expecting gold to trade down lower. And if it does trade below that fair value gap, we could expect gold to possibly go down to 3,200. Now, looking at the technicals, you're probably saying, what is the fundamentals doing? What are we seeing in the fundamentals? Is the fundamentals creating any opportunity for us? And the honest truth is, traders, is yes, the fundamentals are creating volatility, right? This is the reason why we've seen things like here on NQ, we've seen a lot of volatility right here, all right? And due to the volatility, we have opportunities to be able to trade quicker and get in the markets in and out a lot quicker than sitting into trades for long periods of time. So a lot of people fear fundamentals. They fear the news, the wars, the trade wars. They fear all of that stuff, and they stay out of the market only to watch price move in a direction where it could be profitable for them if they entered into the market. Now, granted, either you could either be profitable or you could either lose money. But that is the risk that we take with trading, and it is a calculated risk every single time. So don't despair when we've seen volatility in the markets based on news. Trump, whether it's Trump tariffs, whether it's war, whether it's anything else out in the world that's creating this volatility. Rather embrace the momentum and the volatility. So which means, traders, don't trade against the momentum. When there's news like this and there's volatility around, the best thing for you to do is follow where the momentum's riding. All right. Wherever the momentum's going, trade in that direction. All right. Because it's probably going to be a lot easier for you to make money when you're trading in the direction of momentum. Here's an example right here. NQ currently right now, even though I'm looking at the 5-minute time frame, where's the volume traded? Traders, this is a correction move. The volume is actually indicated right here. If I go to this larger time frame, we can see here that the volume was driving the markets down here. Now, at around about 2 o'clock today, if this candle closes out the way it is, then we've got equal lows. All right, just want to point it out there. The market loves equal lows because this is where we can see sell side liquidity sitting. So which means, traders, that we might get a little bit of a run, but then a sell-off once again to come back to this area. So we could see that the market's on the sell side of the curve, which means that this liquidity is going to be grabbed. Smart money is going to try to take this liquidity. And so if that's the case, traders, then what I would want to go ahead and do is I would want to go ahead and move down to a lower time frame, put a simple trend line in. Doesn't have to be fancy, all right? Go ahead and put a simple trend line in like this and mark it off and look for a trend line break. Now, if you're a trader that likes to use indicators, you could go ahead and put some indicators in as well, right? And then use it, especially if it's going to give you a buy and sell. So right here, we can see here that we're really getting sell signals, indicating that we should be selling. And I'd rather prefer to see the market below these blue trend lines right here, as well as below that trend line right here. So when the market trades below there, we can look for price to go to this level and then down to this level, all right, to retest this level. So what I'll be looking for here between now and 2 o'clock is, does price break below this trend line? If it does, I'd be looking for a short-term sell on this. If it continues to rally, I'll just follow the market and look for around about 2 o'clock and look to sell again on NQ. But traders, you could use indicators, but make sure that you're using price action to make decisions on when to enter the market. All right, not necessarily indicators. Indicators can give you a sort of an indication of where price is going and how price is moving, but this is absolutely going to give you a little bit of more insight as to how to be able to enter a trade based off price action move, not on indicators, but price action move. All right. Now, traders, we're going to go ahead and look at the euro US dollar. We're going to break down the euro US dollar right now and see where the euro US dollar is going. I'm getting a lot of questions coming up where traders are asking about euro US dollar. Is euro US dollar going to continue to rally, or are we at a top and are we going to see price moving down? I'll see you right after this. Alrighty, traders, I said I was going to go ahead and share with you a link here, and I'm going to go ahead and share it here in the chat. So I'll go ahead and share it here inside the live chat here with everyone. Here is the link to the. Let me just go ahead and post it here. Here's the link right here, traders. I shared it in the chat, and I'm going to share it in the Traders Network Club chat as well. There's the link for the 4th of July right there. You can see there we've got 4 days left. It is a special deal, $67. You get access, full access, all right? Full access to the Navigator Pro, all right? Full access to Navigator Pro, Wellflow, the Optimal Traders, all right? Traders, trade with us for a month, all right? For $67, trade with us for a month. Learn what you can do, steal what you can steal, and we're looking forward to seeing you guys there. All right. There's the link. I've gone ahead and posted it. It's TradersNetworkClub.com/4th of July Ultimate Traders. There it is there. There's a special deal for the 4th of July. And it will close out at the end of this timeline. All right. Traders, all right. Let's go to the euro. And by the way, already I'm seeing an opportunity here. See how the market's starting to show manipulation above the high on the NQ? This is setting up for a nice little move to the downside right here. We'll take a look at it in a minute. Traders, if you're also looking for a broker, by the way, FYI, if you're looking for a broker, we're offering free we're offering free access to the Ultimate Traders package for anyone that opens up a live trading account with a cap. All right, if you open up a live trading account with a cap, you will get free access, and it's a $10,000 trading account. You get free access for a whole year to Navigator Pro, Wellflow, and Optimal Traders for a whole year. You're going to pay a cent for that monthly. You get access to the Navigator Pro, Wellflow, and Optimal Trader by opening up a live trading account with a cap. So if you want to go ahead and do that, open up that account, let us know, and we're going to give you free access to the Ultimate Traders package. You don't pay a cent for 12 months, and you get access to all of these tools that are available. All right. So traders, we are always trying to give you guys the best opportunity to get involved. And so with that indecision here, I'm going to just go ahead and put another scalp in here. Now I'm going to chase after 100 pips here because we had a risk on the other trade. So I'm going to go ahead and sell. All right, so I'm going to look for the market to take out that low. So I'm going to go a little bit lower than that. And I'm going to put a tight stop on this one right here. So if the market goes ahead and moves against me, so be it. I'm going to scalp it. Let's see if we can get the little axis on that. All right. All right, traders. Actually, in fact, let's go ahead and move this a little lower right here. And we can make decisions as price gets to this point here. I'm going to go ahead and look for that. And I'm set alert right there as well. So I'm setting alert as the market takes out that low. I want to see what the market does there. And if we get a nice expansion move right here, then we're going to target this low here at this point. Okay. All right, traders, let's go to the euro US dollar. Let's take a look at the euro US dollar. Let's break this down. And so here we go. We've got the weekly time frame showing a shooting star, right? We've got the daily right here also showing us a nice little mohican there. All right. Now we got the weekly range sitting over here. We're looking for price to reject their weekly range high, which is coming off this weekly candle right here. Actually, this is a monthly candle. Sorry, that's the monthly candle. So we got the monthly range candle there, and we look for the market to stay below the close of last month and trade inside that. So I'm going to go to the 4-hour time frame. So traders, if you were wondering, where do we think that the euro is going to go to? And the answer to is we believe it's going to go south. Now, before it does go south, what we're going to be looking for right here, traders, is we're going to be looking for the market to go ahead and trade below this low, right? Here at 1.1683. Once we trade below there, then only then do we start looking for more aggressive selling on the euro US dollar. So currently right now, what I'm seeing here, and this is what I'm teaching, if you go ahead and sign up, or not sign up, but if you go ahead and follow me on Instagram and Facebook and all that other good stuff, you'll see I talk about AMD, accumulation, manipulation, and then distribution. And currently right now, we're setting up with a sell model on the euro US dollar. Now, for me to go ahead and trade aggressively, I would want to go ahead and see price trading below this area right here. Now, some traders say, well, Gary, what about selling right now? Well, traders, this is not the best place to be, but we do see a fair value gap possibly setting up over here. Now, if I was going to sell on this trade, into the trade right here, I would go ahead and put my stop. Let me go ahead and put it in here. My stop above this high. Now, I would go ahead and say that stop above that high is aggressive. So this is an aggressive entry point, and I will target this low right here. Right. And so traders, by doing that, I'm getting in on this trade a little early. Now, I must point out here, if I go to my 30-minute time frame, look what we see here on the 30-minute time frame. And the reason why I can enter in here is because we've got this right here is a breaker block, right? So we had a new high, low, and then a higher high. And this becomes that crown. The market has displaced below here. Yeah, we can pull back up here, but eventually we can see price moving down towards this liquidity area right here. So you can see that the risk reward ratios don't look great. All right. $600 risk for a $960 target. So it's about a 1 to 1.8 risk reward ratio. If you wanted to go ahead and increase that risk reward ratio and reduce your risk, you can do so by simply looking at your larger time frame, like here, and you can take this and say, all right, so we've got, let me see on the 4-hour. Okay, so here's a perfect example. You see this this bearish candle right here? Take your stop loss, put it above that bearish candle. So I want to move that stop loss to about there, and that will be where my stop is going to be placed. Now I'm risking $300 for a 900. Now my risk reward ratios looks like 1 to 3. So it's a much better risk reward ratio. And by the way, traders, by putting your stop above a breaker block, that puts you at a much safer zone. So if the market's going to move down south, yeah, we could come back to retest that breaker block. It may even come up to the what we call the consequent encroachment level, which is 50% of that level, and then test it and head back down south. Now, this might be premature entering, and you could have waited for the market to go back up a little bit higher and then enter the market and look for the sell. Now, I want to go ahead and say this. I've said to everyone that I'm not looking to enter the market on the euro right now. All right. I have not entered. I've not used my, and let's go to this right here. Let's see here. It is going to be on, let me see here. Let me get, and I believe it's on this one right here. Let me see here. Hold on. Yeah. I think it's here. Let me double check. Yeah, there we go. All right, here it is here. Okay, yes. Okay, sorry. Here's the I was looking for the VPS. This is the VPS right here. Let me go ahead and make it large. All right, so here's my smart entry. For those who are wondering what the smart entry AI bot looks like, it's this right here. And so on the euro, I'm actually going to go ahead and enter on a trade. Now, remember traders, this system is built to trade cost averaging. But it's also the system. And by the way, if you sign up for the Ultimate Traders package, you get access to this bot. And this bot also allows you to place your stop losses at levels that you want to go ahead and place. So if I want to put a stop on this, I can actually do that. And I can place a stop loss on this. Let me go ahead and show you what it looks like here. So let me move to let's go to the Euro US dollar right here. Let's change this to the Euro US dollar right there. So if I was to enter a sell on the Euro US dollar right here, and I wanted to go ahead and manage that risk, I can go ahead and enter the market, and you can see here I can actually place a max stop. So the stop loss is sitting over here at 1810. All right. So stop loss is at 1810. So I can keep my stop there. All right. And I can also make my system only trade inside that level. So as you can see right here, it has only got two entries. It doesn't enter, you see 0.00. So no entries after that level. So which means that now I can actually estimate what my risk is going to be. So my risk on just entering two entry points is now going to only be 0.01 risk. So I have a choice. All right. I have a choice. I could say that, hey, maybe I can increase my risk on my next trade. So if I go ahead and increase my lot size, and by the way, I could use lot size or I could use risk percentage. So if I go with the risk percentage and I go and fire that trade, now my second trade is going to go with 15 lots. All right. It's going to enter me at 1798. And now if I look at my estimated risk, if the market goes to this level, will be at 0.06%. All right. Now, traders, if I even want to get a little bit more aggressive, and let's say I decide to change this to lot sizes, and I go ahead and say, you know what, I'm going to go with my trading account is $36,000. So if I go with $36,000 or 36 lots, which is one micro lot for every 1,000, right? That's aggressive. If I go with one micro lot for every 1,000 and I enter this trade right now, what is my risk going to be here? Let's see what it says. Oh, now it says that my risk will be 0.13%. All right. So you see how I can manage that risk by simply, now my first entry point was one microlot. So let's say I go ahead and close this trade out. And now I decide to go ahead and enter based on my new lot sizes. And I enter now with 36 lots on both entry points. What is my now risk going to be? My risk is now going to be estimated at about 0.41%. You see, traders, this is only two entry points. And if I choose to only enter on one entry point, I can do that as well. I can go ahead and say, no, I don't want to enter so many. I just want to go ahead and enter on the first entry point. So I'll go ahead and set it to 0. I'll go here. And now you'll see it right here. Hang on. I got to put it was 1. I got to have at least 1 trade. All right, go put 1 trade. Now, just on the 1 trade, what is my risk going to be? If the market goes to my stop there, I'm risking 0.3%. So traders, you can control your risk. So even though there's 2 ways to trade the market with cost averaging and 1 entry point, the system can do both, but it can also manage your position. So you can go ahead and do this. Now, this is the beauty of this. All right. If you look here on the top, can you see here it says there market chaser? It says the direction bearish, and it tells me my break-even point, and it tells me how many positions I've got in on that trade. And it just tells me the time that I've entered that trade. Now, if you follow a different system, we offer inside the Smart Entry AI bot, you can get 8 signals, 8 trade signals. So you've got 8 trade signals to choose from. So if you want to go ahead and say, hey, Big Dog, let me go ahead and look for, let's say, the Asian market shift. And let's go see if there's any trades on this trade. And it tells you, yes, there's 62 trades holding on this. Now, granted, these trades are firing off. They're firing off as they're coming along. So you don't have to enter it anyway. You can decide and say, hey, I want to trade in the direction of the bias. I also want to trade, maybe you want to trade in the direction of the master signal. You can set it up that it can run automatically. I can go ahead and say, let's find a trade automatically based on those parameters. And you can say, well, I only want to trade in the direction of the bias. I only want to trade when the master signal confirms the signal. And by doing that, I'm going to go ahead and say, okay. Now I'm going to go ahead and close this trade out. And now you can see here the system is waiting for the next setup. So as soon as the next setup pops up, it's going to enter the trade. And I'm following the Asian market shift. So which means the next trade that enters will enter the trade. So I can now have the system running on full auto, and I can follow that along the way. If I want to change it to maybe, let's say, the hedge finder, and I want to find a trade on the hedge finder, let's see what the hedge finder tells me. Tells me, yep, we've got 43 trades. Now, let's say I want to trade a different currency pair. Let's say we go to Aussie Canadian dollar, and we look for that trade now. So Aussie Canadian dollar, let's see if we got here. All right, so we got 2 trades. All right, look here, it popped me into a trade straight away. You know why? Because it had a trade already entered 30 minutes ago. So it's entered me a trade. You see here, the bias is bearish, the master count is bearish, and it's got 2 trades in, and it's now entered me into that trade, and it's automatically done that for me. I didn't have to do anything. The system automatically finds a trade and places the trade. Now check this out. All right, 36. I've got my 36 lots there. I've got my parameters set up right here. It's trading inside the main candle. It's not going to trade outside the main candle. I've gone in with just 1 entry point. Let's go ahead and increase that. Let's see if we go with 10 entry points. See what that looks like. And nope, it tells me, nope, I can only enter the 1. So it's telling me that if the market goes above this high right here, let's cut our losses and let's get out of a trade. So now you can monitor this and say, hey, if the market gets to that point, you have a decision. Close out the trade, or you can go ahead and actually manage your risk based on the different time frames. So currently right now it's working on the monthly. If I go to, let's say, the daily candle and I say, hey, based on the daily candle, where's my stop there? And now it's telling you right here, if I go ahead and zoom in, it's telling me, hey, if price moves above that area, close out my trades. If the market's above this area, close out my trades. I can even do this. I can go to the system. I can change it to the weekly time frame, and I can even go ahead and trail the market and not have a target and let the market just go ahead and trail. So I'll use a trailing right here, set the trailing on, go ahead and put that out. Now you can see there, set up, it says trailing stop loss. And now I can go ahead and set my target. Let's go ahead and set my target for a lot more than just 20. Let's go ahead and target, let's say 200 pips. All right. And now you can let the system just go ahead and trail. And when it gets to that 200 pip target, which is all the way down here, it'll go ahead and close out. But the system's going to trail and keep you in the trade until we either hit profit or hit the trading stop loss. All right. So traders, going back to our analysis here on the euro US dollar, yes, we are expecting price to continue to work its way back to this area. And if we do break below there, we could go much further down. So we're going to take profit on that trade. This is one single entry point here, and we're looking for price to move to that area. All right, last look at NQ as we close off the day today. It looks like we're up in the money on this trade right now. We're going to go to the 5-minute time frame. There it is there. Looks like it's been bouncing back and forth. We're up $92. We're chasing after this as our target, $600 right here. All we're looking for, traders, is 120 pips. There it is, $120. There it is. It's deep in the money right now, 140, 160. We're going to close out right here as we close out the session for today. Done. If we go back over here and take a look at our trading for the day, that was the trade that closed out. And let's go to the history for today. And there is that trade that was full. Let's see if we can pick up this. There it is there. So they ended up closing out with $167.50. All we wanted to do, traders, is pick up just 20 pips. All right, just 20 pips. Now, granted, we took a loss on the first trade, so we've got to make a couple of more trades to make up those losses. But that is pretty much the idea and how we're going to trade. All right. So traders, join us. Join us for that the 4th of July. We've gone ahead and sent that link over to you once again right here. Time is ticking, traders. We're only taking on 100 clients. We're going to close out of 100 clients. Join us for a month. Get full access to all of our memberships right here for only $67 for the month. Get your feet wet. Join our live sessions. Be part of the community. Hope to see you guys there. This is FxBigDog signing off. Have a great 4th of July, my friends. Have a great 4th of July.